Exercise 17. We're going to create the income statement for three different types of companies: a service company, a merchandiser, and a manufacturer. Selected data for three companies are given below. All inventory amounts are ending balances and all amounts are in millions. So like for company A, the amount of cash they have looks like it's 6, but it's 6 million. Using the above data, calculate operating income for each company. Enter amounts in millions as provided to you in the problem statement. Begin by calculating the operating income for company A. So we're going to do the company with the most data presented. So let's see if we can figure out what type of company company A is. We've got finished goods inventory, we've got work in process inventory, we've got cost of goods manufactured, and we've got raw materials inventory. So what type of account is that? What type of a company is that? So that means, going back to our slide, we're looking at the income statement of a manufacturing company. We're going to have beginning finished goods inventory, ending finished goods inventory, all used to calculate cost of goods sold. Fortunately, cost of goods sold is already calculated for us. Getting back to this slide, this income statement is an internal document because it's showing you how cost of goods sold is calculated. But for this problem, it's not. Notice we start with sales revenue minus cost of goods sold gives us gross profit. And we've got gross profit here. So that means we're going to have sales revenue here and cost of goods sold here. So we're going to start with net sales revenue, 48 million. The net in net sales revenue means after sales returns allowances and after sales discounts. And then we're going to have cost of goods sold of 23. And then we're going to take 48, subtract 23, and we get 25 million. Next, we're going to take our selling and administrative expenses and subtract those. So let's find selling expenses are 4 million for selling expenses. Administrative expenses are right down here. We've got 7. So that gives us 11. And then we're going to take 25, subtract 11, and that gives us 14 million of operating income. Fantastic. So again, let's look back at that slide. So if this income statement was an internal document, they would show how cost of goods sold is calculated, like this one was done. But because this is just going to be given to the investors and creditors and stuff like that, in other words, the general public, they do not show exactly how cost of goods sold is calculated. So let's move on to Company B. Company B has only revenues. Well, I guess they do have some assets. But as far as the income statement goes, they've got revenues and they've got 2 expenses. So this is a service company. So we're going to start with sales revenue, or service revenue, I should say, 65. We get that from there. And then we've got wages expense, 12. And what's our other expense? Rent expense, which we get from right here, 12, 24. So we've got total expenses of 24. We're going to subtract those from 65, and that gives us operating income of 41. And then Company C, we can tell that this is a merchandising company because it has a merchandising inventory. So let me go back to show you or remind you what the income statement looks like for a merchandising company. We're going to start with sales revenue, subtract cost of goods sold, and if the cost of goods sold, or excuse me, if this income statement is an internal document, then they're going to show you how cost of goods sold is broken out. However, here we've got gross profit and only 2 lines above that. So that means we're going to start with sales revenue and then we're going to subtract cost of goods sold. So this apparently is not an internal document. This is going to be used for the general public. So we start with sales revenue, net sales revenue. And our net sales revenue is, where is that at? Right here, 75 million. And then we have to subtract our cost of goods sold, 25. Copy and paste that. Cost of goods sold. So we're going to take sales revenue, subtract cost of goods sold, and that gives us our gross profit of 50. And then we have our selling and administrative expenses. Selling expenses are 8, which we get from right here. And our administrative expenses are right here, 4. So just for your knowledge, it doesn't matter how you order these two expenses. Each company will do it differently. Some go alphabetically, some go by account number, some go by the largest to smallest. So let's see here, we got 12, so $50 million of gross profit minus 12 million of expenses gives us operating income of 38. So in future homework problems, we will sometimes have to show how cost of goods sold is calculated. In other words, we won't have cost of goods sold calculated for us like right here. We will have to break it out like this. Beginning finished goods plus cost of goods manufactured equals goods available for sale minus ending inventory gives you the cost of goods sold. So you need to get used to working with the cost of goods sold formula. And that's it.